Yes, sir.
So we have done a monitoring agency. So who are the monitoring agency in India? All the credit rating companies. They have been, allowed to do the monitoring. Okay, for all the IPOs, they are going to check whether the company, who has raised money, whether they are, deploying the money for the purpose for which they have raised the money. So these are called monitoring agencies. Okay, they are going to give the report to SEBI. Then we have allotment procedure and basis. Then allotment, refund, interest we have done, release of subscription money, price and price band, promoters contribution. Now there are promoters generally who start the company, who are the starting shareholders, who are like all the promoters. Most of the promoters will be either managing director or the chief of the company. So they have to need to give some money to the company. Okay, so they should have some participation. So as per SEBI, they should be having at least 20% of the post issue size. When after the shares have been issued, they should have at least given 20% of the money to the company. Okay, they should have at least 20% stake in the company. So but it's not that simple, it's more elaborate and detailed. So we'll talk about more about promoters contribution later on. This is just a small amount, I mean, this thing which we are given. Then minimum offer to public and reservation. Okay, so that means that minimum offer to public, at least the golden rule is that at least 25% of the shares should remain with the public of any listed company. If it falls below that, then the company becomes an unlisted company. It has to go for unlisting. Okay, so now all the companies, they should have at least 25% of the stake in the company. And of course, this rule is also very elaborate. This is just a general limit which I talked about. Okay, then we have allocation and net offer. Now, there are so many people who are, bidding for the shares of the company. They can be, like, we have anchor investor. Okay. So let's talk about these anchor investors. So let's go back and see, who are the people who are actually, bidding for the shares of the company. So let's start with, first kind of an investor and understand a little bit about them. So this is contained right at the end of my slides where I've given some definitions. Okay. Fine. So we are moving towards that first. So, before we, so important definitions. So, first is anchor investor. Okay. Then we have ASBA, which we did briefly. Okay. Then book building, then convertible. So, we are going to talk about that. So, first, let's talk about the anchor investor. Okay. So, first, we talk about retail investor. Now, the persons who are, people like you and me, we also always apply for shares of the company, isn't it? So just read this Akriti. Who are a retail investor?
Retail individual investor means an individual investor who applies or bids for a specified security for a value of not more than 2 lakh rupees. Retail individual shareholder means a shareholder who applies or bids for specified securities for a value of not more than 2 lakh rupees.
So now, there are two classification. One is the retail individual investor. That means he's applying for the first time to the company. Okay. And he's applying for shares below 2 lakh rupees. Okay. It can be an IPO or it can be an FPO, whatever. So he's bidding for shares. Or he can be already a shareholder of the company. Okay. And for the FPO, a company is again, taking money. So he can go for an FPO. Okay. So he can also apply within a amount of 2 lakhs. So anybody who applies the shares below 2 lakh rupees or 2 lakh rupees, he's called a retail investor. Is that okay? Then we have anchor investor. Read this.
As per SEBI, Securities and Exchange Board of India regulation, an anchor investor is a foreign
Now, there are certain investors who are called anchor investors. They'll be the first one to be given shares before even the IPO opens. Okay. So they are big investors. Okay. They are part of the QIBs, qualified institutional buyer. So we'll talk about who is a QIB. Okay. We'll just discuss that very shortly. Who is a QIB? So anchor investor is one among the QIB who is going to be issued share before even the issue opens. Okay, he's the first one to get the shares of the company at the time of an IPO. Read.
This concept is used in
Now, if there are big anchor investors who are participating, they are known companies, okay, in India. If they participate and in a issue of a company, they boost the prospects of the company and give more confidence to the normal shareholders who are retail shareholders who can participate, in the process, in the book building process. Okay. Key features of the anchor investor.
key features of anchor investors.
Okay, just hold on. Just hold on. Now, only QIBs, okay, qualified institutional buyers, okay. So that means they are all big, financial institutions who are collectively known as QIBs. Okay, so we are going to talk about who are QIBs first, okay. Then you can, okay. First, we are going to talk about who are QIBs, okay. Okay, just read that.
Qualified institutional buyers.
So they are, called qualified institutional buyers. Okay, they are registered by SEBI. They have been approved by SEBI, and they are institutional buyers who have a lot of money with them. They have financial expertise, and as well as they have, money with them, and they can evaluate a company before putting money. So if the QIBs are going to put money, then it becomes a very easy process for the company to raise money from the others. Okay. Okay, there are about 13 QIBs altogether. Who are them? Just read.
Mutual fund, financial
Okay, so that means it can be either a mutual fund, any mutual fund. They can also invest into the, IPO, okay, or a venture capital fund, an alternate investment fund. So you can always go through what are alternative investment funds and understand what they are, okay. Foreign venture capital investor, FPIs, public financial institutions, and scheduled commercial banks. So these are how many? Seven. Read further. Now, that makes the total tally of about, I think, 13. Okay, so 7 and scheduled commercial banks are repeated twice. So there are 13 financial institutions. Together, they are called QIBs, like, multilateral and bilateral development financial institutions, state industrial development corporations in India, insurance company, they're sitting with a lot of money, provident fund with a minimum corpus of 25 crores, and pension funds. Now, India also, and of course from abroad, there are a lot of provident fund and pension funds. They invest into India, as well as Indian, provident fund and pension funds. They also invest into shares market in India, but they have a very restricted, because now the Indian government has allowed these pension funds and provident funds corpus to put money into the share market. Okay, like, most of the company money comes from abroad. The pension funds of, in America and, Europe, they are putting money into the IPOs or FPOs of the company. So these are all called QIBs. Then public financial institutions and the banks. So these are all together are called qualified institutional buyers. And why they are qualified? Because they are qualified and they are registered under the SEBI. Okay. Then we go back to understand the anchor investor further. Okay, now just read timing Meetha, sorry. Okay, eligibility. Now read this again. Okay, so now retail investors cannot be an anchor investor. Then high net worth individuals. That means there are certain people who had a lot of money with them, so they are called HNIs. So they can also participate in an IPO process, and we'll understand more about them. So they are not eligible as anchor investors. Reservation. So the anchor, they have to minimum invest 10 crores in an IPO to be called as anchor investors, and they have to be QIBs. And QIB has a quota. Okay, as you'll understand, the retail investors, HNIs, and QIBs all will have certain quotas depending upon what kind of an IPO it is, and we are going to understand in our slides. Okay, as we understand. Okay, later on. So then timing. Okay, now timing is that these shareholders, anchor investors will be given the shares even before the IPO opens. Immediately when the SEBI gives a nod with respect to the offer document and it approves it and it is filed with the registrar of the companies, it becomes a prospectus. Then at that time, the company can go and open the IPO. So before they open it, so a day before that, the shares will be allotted to anchor investors. Okay, and they have to be a QIB. So now they have a lock-in period. Okay, so they have a lock-in period of 30 days from the date of allotment. So that means they can't sell their shares, within 30 days after they have been allotted. And of course, if it is a small SME, like small and medium companies IPO, then the lock-in period will be much longer. Okay. Now the price, at what price they are issued, the price is decided by the company and the anchor investor at what price they will be allotted shares, but it has to be within the price band. It can't be lower than the price band. The anchor investors cannot be given any discount over and above the others, so they have to be given at the same price at which the others are being given, and it has to be within the price band which the company has decided. Okay, is that clear? Okay. Okay, so this is the same. So I'm just going back. Okay, retail investors हो गया था. Okay. So IPO red herring prospectus. Okay, so there's something called a red herring prospectus. Okay, so let's understand what it is before we understand further. Okay, so that we'll do later on. Okay, first we'll just remain with our own this thing. So this is we have done. Okay, okay, fine. So I'm just skipping all this, boxes, which we'll be doing later on once we have, this thing. So application of the applicability of regulation. Just read this. Now, all these IDEA regulations are applicable to all such kind of issues. First, an IPO. It is applicable to an IPO by an unlisted issuer. That means you are a company you have not been listed so far. That means you are not listed on Bombay Stock Exchange or National Stock Exchange. So you're going for an IPO. So this company will be under the regulations. Then second is whenever the company is coming with a rights issue, that means it is going to issue shares to its existing shareholders. That means it has to be listed entity, right issue by a listed issuer. Now, wherever the right issue size is more than 50 crores, then the SEBI regulations ICDR becomes applicable. So if it is above 50 crores, they have to comply with the regulations. If it is less than 50 crores, they have to forget. They can't, they don't have to comply with these regulations. So they are, they can do, whatever they want. But if they are 50 crores and more, then they have to be, comply with all the regulations of ICDR. Then FPO by a listed issuer. So whenever a company which is issuing subsequently shares, which is already listed, so they need to also comply with the regulations. Then a preferential issue by a listed issuers. Sometimes company can issue shares only to a selected few companies or people. Okay, so it's called preferential issue. Okay, instead of going to public or instead of going to QIB, instead of going to anyone else, say that we are going to issue shares to only certain strategic investors. Okay, there are some rules which we understand. So it's called preferential issue. Here, the company doesn't issue any shares to anyone else except to a selected few where the company decides who are those people. Okay. Then we have qualified institutional placement. So here, the company will say that we are going to straightaway allot the shares to the QIBs. We are going to 100% allot shares to QIBs. We are not going for a public procedure. We are not going to offer shares to the public. We are going to put all the money in the hands of QIBs. So it's called qualified institutional placement. Okay, so it can be either a public offer, it can be qualified institution, or it can be preferential issue. Okay, fine. So then read this. Now, these regulations are also applicable for an IPO of IDR. Okay, so a foreign company can come to in India and issue shares through a process of called Indian depository receipts. Like, our Indian companies, they have issued GDRs and, ADRs in America and other countries. And the foreign companies can also come in India. Okay, instead of listing their shares directly, they can list their depository receipts. Like, there's only one case over the last, 10 years where a foreign company has come and issued IDRs. This is called Standard Chartered Bank. Okay, Standard Chartered Bank is the only guy who has listed their depository receipts in India. Okay, so this is IDRs, whether it is a IPO or a right issue of IDRs. So there is only one case of a IPO, and there is no case of a rights issue of a IDR. Okay, so do you know what is IDR? ADRs, GDRs, do you know that? Srishti? I mean, Akriti? Have you heard about what are ADRs and GDRs? ADRs and GDRs. Okay, so I'll cover this, when I take a offline class next time. So there is a class of, this thing called GDRs, okay, where the Indian company can go to America or Europe and issue shares through a process of called Global Depository Receipts or American Depository Receipts, okay. So that process is called ADRs or GDRs. Similarly, a foreign company can come to India and issue IDRs. Okay, so those IDRs are governed by ICDR regulations. Okay, is that okay? So we are going to cover them what they are, but for the ICDR purpose, because there are hardly any case, so we are not going to touch it. It's not that important. There have been only one such case in India so far. Only Standard Chartered Bank has issued IDRs in India. Of course, in India, from India, we have Reliance, we have Infosys, we have many companies who have issued GDRs or ADRs in America and London Stock Exchange. So we are going to talk about more about them in our next class. Then an IPO by a small and medium enterprise. Okay, suppose the company is very small and they want to issue shares, they can through an IPO. So they are also governed by these regulations. Now, listing on innovators growth platform through an issue or without an issue or a bonus issue. So even if the company is issuing bonus shares, so they will be also governed by these regulations. So there is, there is a listing on innovators growth platform through an issue. Okay. So have you heard about innovators growth platform? No. Okay. So I'll just going to introduce that to you. Okay. So, there is something called main board. What is main board? Main board is that Bombay Stock Exchange and National Stock Exchange where all the shares, all the big company shares are traded, like Reliance, Infosys, they are traded on the main board. Okay, so there are divisions of stock exchange in India. Okay, just read this. Now, whenever the company is coming with an IPO, okay, so if the company is big, if the company is, promoted by, say, Tatas, Birlas, or very big, kind of players, and they are already very big, so they will go and list those shares under the main board. That means the main stock exchange, where all the stock trading happens. It's called the main board. For all the companies, they should have at least a capital, post-issue capital of 10 crores. Now, there is something called SME exchange, which is part of the National Stock Exchange, but here only small companies are trading. Okay, so there are two or three bifurcation of the stock exchange. One is called the main board. So whenever we are looking at the stock exchange and seeing what is today Sensex and Nifty, we are always referring to the main board. But there is always another part of the stock exchange which is called the SME exchange. Read this. Okay, now as I told you, there are so far we understand there are two bifurcations. One is called the main board, another is called the SME board, SME exchange. So all the big companies they trade, and all the new listing happens in the main board for all the big companies. But if the company happens to be a small company, they will go to the SME exchange, which is again another term, another category of the stock exchange, which is again, all the trading happens for smaller companies. So they will get listed in a SME exchange. Now, read further. So there are again two bifurcations of the Bombay Stock Exchange and National Stock Exchange. In on the one side of the exchange, we have all the major companies of India which trade, and the other side of the exchange, which are small and medium companies which are trading. Okay, so a company can be listed either on a National Stock Exchange main board, or it can be listed on the SME exchange, which is a small company. So it is basically to help companies to get themselves registered, so that so there is a clear bifurcation, so it becomes easier for smaller companies to get themselves registered on the SME exchange. Okay, then we have the which one, which is called the innovators glot platform. Okay, so innovators, देखते हैं वो क्या है. I think I just missed out here. Okay, just hold on, exiting. Now, this was the slide which I was taking you through in the beginning. So, there is something called read the last paragraph, IG. Now, this one, the last box, listing the one, two, three, four, listing pursuant to IPO. Okay, read this, Niche. Yeah. Okay, now as we understand, now there are three divisions. One is called the main board, second is called the SME exchange, and the last one is called the IGP platform. Okay, IGP platform. Now that is also a part of the stock exchange of Bombay Stock Exchange and National Stock Exchange. This is designed to for the listing of innovative, high growth companies, startups. Okay, so that they have, they are, these sectors which are technologically driven. Okay, they are, using a lot of digital, kind of a technology. So it is generally smaller companies. They have given access to the public markets through the IGP platform. So where you have relaxed norms. Okay, so to understand again, there are three bifurcations of the stock exchange. One is called the main board. Second is called the SME exchange, which is for small and medium companies. And third is called the IGP platform, where only the startup companies are allowed to be listed and traded on that part of the stock exchange. Okay, fine. So there are three bifurcations of the stock exchange. Okay, one is called the main board. Okay, okay. So is that clear? कुछ समझ में आ गया आकृति? Ritesh? So there are Abdul, there are three kinds of stock exchanges. What are those? Main board, SME exchange, yeah, IGP. So IGP में कौन सी कंपनीज होती हैं? Okay, and on the SMEs, small and medium companies. Okay, fine. And main board is all the big companies. Okay, so now just read this. So now we are going to talk about the regulations governing of an IPO on the main board. Okay, fine. So these regulations which are there are covered under IPO regulations number 4 to 55 and FPO, which is regulation number 101 to 131. Okay. Now I have just shared the IPO regulations. So I will not be, you don't have to remember these regulations, but you should have a little bit understanding about these regulations a little bit. Okay. So just open, just open the file which I have shared with you, ICDR 2025. Okay, just open that. Okay, so are you seeing that the file which is open? I have opened. So these are the regulations. Okay, fine. So if you start with this at the top, uh, this is basically called the Security and Exchange Board of India Issue of Capital and Disclosure Requirement Regulation 2018. This is issued by the Security Exchange Board of India. Okay, and this has been amended and the final document. And this keeps on the SEBI keeps on amending it. So the chapter one is basically talking about all the definitions, okay, which has been used. Okay, we'll come back to the definitions wherever we require, and all like anchor investor, whatever I've said, SME exchange, all the kind of definitions are given in this. Okay, so but we will see about the IPO requirements. Okay, so we finish off the we come to straight away the page number 8. Can you see the page number 8? Akriti, can you read this little bit, chapter 2, IPO? Okay. Yeah, further. Okay. Now, if the issuer or any of the promoters or promoter groups or directors or the selling shareholders are debarred from accessing the capital market by the board. Now, sometime the Security Exchange Board of India would say that these people are debarred from, I mean, raising money from through IPO or FPO. Like Vijay Mallya. Now he has been debarred from issuing any shares in India. Like one time even the Ambani, there's this who's the name? Mukesh Ambani's brother, Anil Ambani was debarred because he was having some kind of an issue. So he was debarred, briefly debarred for raising money, okay, from by way of an IPO or an FPO. So an issuer shall not be eligible to make an IPO if the issuer or any of its promoter group or directors or selling shareholders, like I told you, they can be offered for sale. So some shareholder would like to sell their shares. If they are debarred from by the board, so then they can't go and raise money through an IPO. Okay, so second B, agreed. So that means if any of the promoters or directors of the issuer is a promoter or a director of any of the company which is debarred. Now, this is an indirect way of debarring. If suppose there is a promoter who is also happen to be the director of another company which has been debarred, so then the first company will also be debarred from raising money. Okay. C. Now, if he's a willful defaulter, that means he has taken a loan or anything and which is not returned to a bank, like again Vijay Mallya, he has been considered, he's been declared as a willful defaulter. Okay, so he can be debarred or he will be ineligible to make an IPO or an FPO. Okay, next. Offender. So now, I'm just closing it. Even if you are an offender, okay, so you will be debarred. Okay, fine. So let's talk now here. Just read this again.